It's Brian Preston, the Money Guy.
Jennifer has a question. She says, for term life insurance, we were just talking about life insurance. Should a family plan for income growth over the next 15 to 20 years when picking life insurance? When you may need it, the life insurance might need to be higher. Is that true? So how should she think about that?
Well, let me ask you a question, Rabe. So you said that it sounds like you and Jennifer are in a similar situation.
It's true.
You and your husband have had that conversation.
I'm shopping right now. Mm-hmm.
Have y'all had that conversation about like how much do we buy, or what if we need more in the future? Have y'all gone down that route?
To be honest, not totally,
Okay.
because that's kind of what I'm trying to figure out, right?
Sure.
Like I know that I want a term policy. So yeah, I'm kind of with Jennifer on this one.
So
What should I be thinking about?
Yeah, let me speak to that. In my opinion, when you buy life insurance, what you want to protect against is what happens if I get hit by the bus tomorrow, right? That's the thing that you're thinking about. And so how much do I need if I were not here tomorrow to be able to protect the people that are counting on me and depending on me? Well, a really easy rule of thumb is 10 times your annual income. Plus if you have outstanding debts you want to pay for, maybe you got to think about college. 10 times your annual income usually gets you in the ballpark. Now, there's a more sophisticated way to think about this. You can think about, and this is kind of how we do our insurance analysis here, the present value of future earnings plus future obligations like college, retirement, debt payoff, those sorts of things. And there's a present value calculation you can do there to determine insurable need. Most folks don't need to go through that calculation, especially not like early on in your career. 10 times, it gets you pretty close, right? It
Sure.
gets you kind of in the ballpark. Well, you might be sitting in Jennifer's situation, or even in the situation you're in, and think, okay, well, 10 times my income right now might not be the same as 10 times my income 10 years from now. That's okay. That's the beautiful part about term insurance. We know that like for a 25-year-old healthy male, for $1 million of coverage, it's like $30 a month. Mm-hmm. It is like incredibly, incredibly, incredibly
Why would you
inexpensive.
not? Yeah.
So, okay, say that you want to go get $1 million at age 25. Perfect. Well, say that you continue to work and maybe have some more kids and you get a bigger mortgage and your income goes up and just lifestyle increases, because that's what naturally happens to all of us. At age 35, 10 years in the future, you decide, okay, I need more insurance. Well, great. You go start shopping for it. At that point in time, say, okay, what's 10 times my income? I've already got $1 million in coverage. And that $1 million 20-year policy I bought at 25 still has 10 more years on it. How much longer do I need insurance? Do I need to get another 20-year policy and add an extra $1 million so I have $2 million of coverage? Or do I want to let that $1 million fall off and I'll just get a 20-year, $2 million policy? Or maybe do I want to look at a $3 million policy? And it's not uncommon. I know this has happened in my own personal situation. I have the very first insurance policy that I ever took out. And since then, I've added 2 or 3 on top of it. And I just kind of have like this staggered thing of term life insurance going throughout that'll carry me, well into the future, well into my children's adulthood, because that's what I'm really trying to protect. If I can just get my kids to adulthood, the plan is my wife and I, with what we've been saving and trying to accumulate, that she'll be okay if, at that point, once the kids are of adult age, and you can just kind of bolt them on as you go. The other beautiful thing about term, you're not married to it. You're not committed to it. You may get term insurance now and pay for it for, the next 6 years, and then you hit the mega millions and you're like, I don't need term insurance. Great. You can just drop it. Just stop paying for it. It goes away. No harm, no foul. So for Jennifer, it's okay, I think, if you think about income growth over the next 2 or 3 years, but I wouldn't try to get insurance at 25 for your 40-year-old self.
Sure.
I just think that's going to be hard.
Bolt it on.
You can always bolt it on. And if you ever watch like TV commercials, do people watch TV commercials anymore? AJ, do you watch TV commercials? No, you don't see TV commercials.
I mean, YouTube
right,
commercials.
So YouTube when you used to see commercials for life insurance, it always show like a sample policy, and it's always a 40-year-old. If you always look, it's always a 40. Because at age 40 is really where term insurance is still like super, super cheap. Once you start getting older, mortality starts kind of working against you. But right there in your 40s, it's really, really inexpensive. So if you get policies in your early 20s, mid 20s, late 20s, early 30s, mid 30s, late 30s, even early 40s, it's very, very, very affordable. So bolting it on is not an incredibly difficult thing to do, assuming you got to stay healthy. They do make you pass the health exam, but it's not an incredibly difficult thing to do.
Yeah. So hopefully that gives you some more food for thought, Jennifer. I know that is helpful for me. And I think I knew in the back of my head that you guys had shared you can always add more later if you're getting term, which is super comforting and takes some of the pressure off, right?